To Breaking Bitcoin, ladies and gentlemen. Let's get started. Welcome back to Breaking Bitcoin, everybody. Hopefully you're having a fantastic day. We've got a lot to talk about today. Let's shift back over into the big view. Thank you guys so much for coming to today's Breaking Bitcoin episode. Of course, it is January 10th, 2023, foul year of our Lord. The Bitcoin markets are pumping. Consensus and Coinbase are laying off hundreds of employees. There's a Solana shitcoin that is apparently paying $1,000 worth of yield. Could it make us rich? Things could not get better. And it does appear, this is good. It does not appear as if my video is so laggy today. So we're going to have a good stream today. Hopefully you guys are doing fantastic in the chat. Hopefully everybody is doing well. We're going to talk today about what we see on the weekly charts, the daily charts, look at both trend and reversal opportunities within our current market structure, market regimes, and of course, the best possible ways to profit during the bear market. If you guys are watching, make sure to go to the first link in the description and grab your free copy of the 5 mistakes holding you back from profitable trading. This is my new guide that I just put out based on my years of experience. Also in today's show, I'm going to go over the second of those 5 mistakes, which is asset selection. We'll talk about that here in a little bit, so make sure you guys stay tuned. For now, let's get into the charts, break Bitcoin down. All right, shout outs to you, Jack Adams, and everybody else watching on the live stream. We're going to start off as we are wont to do on the weekly chart of Bitcoin, analyzing our current market regime and our current trend status. What are the trending opportunities and where are our significant levels of support and resistance so we can have our roadmap of where price is. We are using the Binance weekly chart for this. And the first thing that we're going to point out here is we are using the Kraken cryptocurrency exponential moving averages indicator and the Kraken cryptocurrency Ichimoku indicator. You guys are free to use whatever you like to determine your trend status, where your opportunities are. We're going to use these. Moving right along. Our exponential moving averages indicator is very telling here. On the weekly time frame, we are now trading above the shortest EMA that we use, or WEMA, weekly moving average, which is the 8 period. Now, the 13 period moving average is above us, and it will be interesting to see the interaction because as you can see, if we zoom out here just a little bit, we are trading in a descending channel. You guys know that I don't give too much weight to chart patterns. I'm far more into momentum oscillators and overall momentum and trend, but it is an interesting thing to point out. Now, this will all make a little bit more sense too when we dive down to the daily and we look at the compression of the Bollinger Bands and see the current expansion of volatility and why I think we might potentially go higher. But we don't have significant key resistance until our 21 WEMA also coinciding, giving us confluence with our Tenkan-san leading line from the Ichimoku indicator as well. Both of those are coming in here right at about the 19,100 level. So if the daily trend does continue to pan out, especially when we look at the weekly reversal system and we see the bullish divergence that we currently have right now that we're currently playing out, we might trade as high as 19,117. Now, it's important to point out, I think we might wick that high. The most logical path forward for me does seem to be that we do stop at a weekly closing basis around the mid 18,000s. And if we wick up to 19,100-ish and reject, that's when I'm going to be looking for my reversal short opportunities. It is a trade in line with the weekly trend, which is bearish. The current market regime is consolidation inside of a bearish trend. So we haven't taken out any previous highs and we haven't really crossed any significant lines and stayed above them for a significant period of time. So at this point in time, while it is exciting to see the prices moving up, to see nice money flowing back into the markets, as a long-term trader and investor, we do have to be cautious and only go with confirmation. And we don't really have any of that confirmation just yet. So still a bear market rally. It will be a bear market rally until we are able to successfully do one of two things, and preferably both simultaneously. One, break above a previously established weekly high. As we can see at this point, all we have to do is close a weekly candle above 21,489. If we can do that, we will have broken a previous weekly high, and we can say with more confidence that we've broken market structure and that there is more potential in trading to the upside. The second thing that we could do is close and stay above the 21 WEMA or the Tenkan-san leading line, the blue line on my chart here, or the green line on my chart. Either of those would be significant. would be powerful and give us a little more strength for the Bulas and give us the opportunity to kind of shift our strategy from looking to short overbought opportunities to looking to long oversold opportunities. So we'd be shifting from trying to buy low and sell high, whereas currently in our current market regime, our strategy has been sell high, cover low. All right, because that's how you make money in a bear market. You have to short, you have to use derivatives, and you have to short. And this is generally kind of the unfortunate part. This is why a lot of long-term investors, I think, tend to lose money in these areas in cryptocurrency, not just because bear markets are hard, but specifically in cryptocurrency, a lot of more lackadaisical investors or more dollar cost average investors will just let their money sit on an exchange and they won't supplement any of their trading with derivatives. And you don't always want to use derivatives. Typically in bull markets, derivatives are not the greatest thing. You don't really need to use them unless you're very experienced and know exactly what you're doing. But in a bear market, they are an absolute necessity if you want to be able to trade. You know, if you're just a buy and holder, if you're just a spot trader, then there's no way you can be excited when price puts in a huge 25% down red candle. There's just no way you can be happy about that because you're forced to be long only. If you're using derivatives, you can be excited when we have a large down movement because you're able to hold a short. You're able to hold a short position. So very key importance. Let's switch over into the full chart now. Okay, and there we go. All right, all right. So talking about our weekly trend opportunities again. 21 WEMA and the Tenkan-san leading line is the most significant thing to point out here on the weekly time frame. Let's now shift into the reversal system on the weekly time frame, and let's give. Okay, cool. Yeah, it does seem that our stream is not being very laggy, which I am very happy about. Let's all be very excited about that. Cool. Very excited about that. Yesterday, we had a terrible lagging stream because I was using this, my Surface Pro 7, to stream on, which is great for taking notes on the go, but not doing anything serious. So I'm very happy to have the slightly upgraded Beast, not really Beast laptop. I don't really have my Beast material with me yet, but it will be coming. UPS is relatively quick. All right, let's take a quick sip of water and we'll talk about our reversal opportunities here on the weekly. Okay. Weekly time frame, let's zoom right in. Of course, the most key thing here to note is, of course, the compression of the Bollinger Bands. Whenever we see the Bollinger Bands compress, we always get some follow through. We always get some expansion of that volatility and price moving in a more dominant direction, having the ability to hold a slightly more sustained trend. Now, we will again notice here that if we zoom out, with the FTX collapse, we did reach oversold conditions, all right? Excuse me. Well, what am I doing? The FTX collapse was right here. All right. So with kind of the conclusion of not the, what do we want to call this? This is just a bad area of the market. I mean, this was 3 months of relentless selling. All right. And then to top that off, and then we get that punctuated by this big 22% down candle the week of the FTX collapse. But I want to point out that even with that, and this reminds me so much of the March meltdown back in 2020, I do believe. Yeah, 2020, when the BitMEX liquidation engine basically tried to crash the entire market and Bitcoin fell to previously unseen levels. You'll notice that we did not actually put in a lower low on a momentum oscillator. In fact, we put in a higher low, and this is what's called regular bullish divergence. It can be an important indication that the momentum of the bears is waning and weakening, and a potential reversal in trend is on the horizon. And that's what we're seeing right now. And with seeing a few weak but promising weekly up candles, it's starting to get a little exciting. If you'll notice, our PPO Laguerre is starting to come out of significant buying opportunity, giving us an even lower low. So this is all pretty exciting, guys. And as I said yesterday, I have to think to myself, is it possible? Is it possible that the bear market is over? Why do I ask that? Because it seems to me so logical. Because we've been doing very well with our strategies of shorting when things are overextended, but it just seems so logical because it's happened for us so many times. But is it possible that because I feel it's such a sure thing, that this time I'm wrong? And it's not just me. Counter trading your own intuition can be a very powerful strategy. If you find that you're losing money as a trader, then just adopt the contrary opinion toward yourself. Anytime you want to go long, just go short. Oh, shoot. Sorry, guys. Is it better now? Hopefully the mic is a little bit better now. Apologies. Maybe I got a little too close. Got a little too cozy with the microphone with the Audio Technica 2020. Oh, dear Lordy. No, something is wrong. Okay. Shoot. All right. Apologies about that. Working on it, guys. Working on it. Any better now? Oh, man, you guys are killing me. It was okay until I went, oh. So is it okay now? Come on, magic fix. DSLR camera. Okay, so there's something wrong with the full screen scene. All right. Boom. All right, cool. Thanks, guys. Appreciated. You know what? This is why I love live streams so much. It's community. We're all together. Diagnosing Justin's jank audio setup. You know what I mean? Like all at one. Like friends. You know, remember those? Used to have them in school? Friends? All right. Thanks, guys. I really appreciate that. Okay, cool. So as I was saying, possible that the bear market's over because that is not only what seems to be so logical to me, but also what seems so logical to the rest of most of the finfluencers that are on cryptocurrency YouTube or Twitter or wherever. It's just, you know, it's not even finfluencers. It's legitimate research articles and papers. I don't see anything. And I pay thousands of dollars per year to get some of the best research out there. And nobody is talking about or about a reversal right now. Everybody's saying things are just going to get worse. So when there's blood in the streets. And again, just as I said yesterday, the only action I've taken as a personal investor on that idea is that I have ramped up my Money Mondays. Okay. I've started to increase the dollar value of my weekly dollar cost average buys into Bitcoin and Ethereum. And I'm only dollar cost averaging into Bitcoin and Ethereum at this point. I'm not buying shit coins on the way down. It's not the way to do it, guys. When the market is turned, then I'll dollar cost average into shit coins on the way up and ride that trend. That's the way to do it. All right. So back to the split. Hopefully we're good now. And check it out. I have this handy dandy. There we go. Yep. OBS shortcut that should resize the window here momentarily. Yeah, I already did it. Cool. All right, so compression of the weekly Bollinger Bands. We're not oversold. We have regular bullish divergence, and we're not overextended in any way. So the only opportunities I really see here on the weekly is the play out of the weekly bullish divergence. The only thing we really have to overcome is to break this descending channel. Not really too worried about that. And then again, those levels of resistance on the weekly trend time frame, which we can just blast through. Trends blast through resistance as if they're not even there. So just areas to consider taking profits. And if we do see rejection, then areas where you want to consider potentially going short. So what would be my perfect ideal short setup? Well, my perfect ideal short setup and confirmation of everything I'm talking about would look like this. Again, on the weekly time frame, we've got that 21 WEMA and the Tenkan-san leading line on the weekly time frame. My ideal setup would be price on the weekly time frame looking like an inverted hammer candle, so a shooting star pattern, where We wick up to about 19,100, either on this weekly candle or the next weekly candle, and then we close back down below the channel line. That would be my perfect ideal short setup. And if we see that happen, then I'm going to shift position and move for a significant reversal short. Ideally, I could line that up with a daily overbought opportunity so that I could get on the daily time frame for a reversal trade. That would be my ideal perfect setup right there. That's what I'd be looking for. And I'm long until then. I'm basically long until then. So, all right, so let's go down to the daily, see where things are on the daily. Of course, we're going to start off with our trend detector. We, of course, have broken successfully above the 21 DEMA. And as soon as this happened, I put out the market analysis. This would have been last Friday when I was talking about this. And I said, hey, guys, we've broken above. Let's go long. And then I immediately goofed it up by taking an hourly short trade, got stopped out, and then immediately went long and took the trade that I was supposed to trade. So finagling sometimes gets you in trouble, but it's all right. Took my small loss, and now I've recovered that profit and then some with the long swing position here that was signaled with our Pathways to Profit daily standard strategy on Bitcoin. By the way, if you guys don't know this, I send out this really good newsletter every single day to our premium members where I cover my overall thoughts about the market, and then I cover basically what I'm covering on the stream, but just a little bit more in depth, a little bit more to the point. Weekly market regime, key points of support and resistance, weekly reversal systems, what the trend opportunities are, and in addition to that, what the reversal opportunities are, what our trading strategy is actually signaling in terms of entries and exits, where our take profit and stop levels are, and then how our automated strategies are doing, both bottom feeder and SD DEMA. If you guys are interested in that, link down in the description if you guys would like to work with me. All right, moving on. So daily time frame, we have now broken above the 21 DEMA and the 55 DEMA, which was pretty significant. Remember that the 55 DEMA is what slapped us down previously. And look how it slapped us down. We traded all the way up to the key June and almost to the Kumo Cloud, and then got slapped down and closed at the 55 DEMA, which led to a violent movement down. And this is what market structure looks like, guys, if you don't know, when we're in a bear market. Movements to the upside are slow and steady, and then it's escalator down, stair steps up, escalator down. People say that that's true in a bull market, but I don't necessarily believe that. When you see escalator down, the party's over. The party is over in a bull market. So I digress. So Kumo Cloud, again, we've got quite a bit of ways to go to the channel. I think a lot of daily time frame traders might get excited about a potential edge-to-edge trade, and that's going to look at where the upper band of the Kumo Cloud is in about a week. That's at that $19,100 level. So this would be perfect confluence with that weekly level, that weekly 21 WEMA, that weekly Tenkan-san leading line from the Kumo Cloud or from the Ichimoku indicator. That would all give us perfect confluence. If we breach into the Kumo Cloud here, blast through the channel line as if it doesn't even exist, do an edge-to-edge trade up to 19,100, and then come back down over the course of a week on the weekly time frame, that would look exactly like I just described, where we wick up to 19,100 and then close back down around 18,500, 18,300. And that would be a perfect reversal opportunity and short setup. So keep that in mind. Really good opportunities for both trades. For now, we hold the longs. We could reject here. And if we do, I'm going to likely miss out on the opportunity to short now. And I don't think I'm being greedy. And the reason why I think we can continue. Let's go to the reversal chart on the daily time frame. And I want to point out this long looking structure, which is don't say anything in the comments. Keep it good. We have Bollinger Band compression, and pretty significant Bollinger Band compression. And Bollinger Band compression is a really good, you guys know that I've often been harder than Bollinger Bands, but lately I've just been kind of defaulting to them because they're just so good at measuring volatility. So when the Bollinger Bands compress, it lets you know that the range of price is decreasing. Price is moving in a very tight range. And when they expand, it means it's trending and we're trading in a very wide range. But you can see the difference here, right? Compressed Bollinger Bands, tight range, expansion, big movement. All right, so we're experiencing the same thing. Now, I don't want to get over my skis and think that we can get that expansion to the upside here in a bear market, but I think we can. Or I'm going to miss this one, and this right here, this moment, right now, this green candle, this is as high as we're going, and this is the time to short. And if I don't, I'll miss it forever, and I should quit my career as a trader. I don't buy that. You know, I've missed thousands and thousands and thousands of trades, and you are going to too. And that's not the point. You can't catch everything. I'm not a robot. The point is catching enough profitable trades and having decent enough risk management to reduce the negative impact of your losers. That is the formula that if you grind that out for 10 years will make you a successful trader. And you don't have to wait 10 years to be a successful trader, but that's how long it's going to take to become a master. You can become pretty competent in 6 months to a year if you really take it seriously. Hey, thank you so much, Rudy LaPlane. And in honor of Rudy LaPlane, let's give a quick shout out to the chat. You guys have been with me here for a hot minute. We've got Jack Adams, Evo, Mr. Ether, Robert Warner, the man, the myth, the legend, the moderator of wonder, B Flow. What's going on, my brother? Longtime member, very good friend. Righteous Reject, Chili Lime, Jack Adams, as I already mentioned, G, and of course, Rudy LaPlane. Thank you guys so much for joining me live. I highly appreciate it. If you guys want to support the stream, share the link with your friends, families, people you don't even like. Okay. So we're going over daily trend, daily reversal. We're not going to be doing the PTP trading strategy on this. Wow. Excuse me, guys. We're not going to be doing the we're not going to be doing pathways to profit. We're not going to be showcasing the pathways to profit trading strategy on the stream anymore on a regular basis because that has been so successful for us over the last 4 years. I do want to keep that my particular strategy. I do want to keep that in the group and exclusive to the members of the trading and investment community. Also make sure that they are getting more value for their subscription. But we are going to be covering these basics: market dynamics, market psychology, market structure, and potential trade opportunities on a daily basis moving forward. Just slightly shorter. All right. Thinking. Give me just 1 second. All right. While this is loading, we are going to now talk about the second of the 5 mistakes. The second in the 5 mistakes about what, Justin? What saith thee? The second of the 5 mistakes, and the 5 mistakes holding you back from profitable trading. This is my new guide. You guys can download this absolutely for free. It's the top link in the description. Sorry that my internet's loading just a little bit slow right now. Streaming, it's hard on a laptop. Give me a little slack. But the second of the 5 mistakes is going to be, we covered yesterday. We covered yesterday's first mistake, which is going to be schedule or lack thereof. The second mistake that I see so many traders make on a daily basis is what they trade. Okay. And this is so important. I see traders hop from trading things that they feel comfortable with, that they've actually done back testing on, that they're actually forward testing or live trading with their strategies. And then they'll see a tweet. They'll see something in Discord. They'll read a Cointelegraph article and off they go to invest into some shitcoin that they've never heard about. And this is one of the easiest mistakes. This is one of the easiest ways to lose your money. Okay. Now, unfortunately, a lot of traders, most cryptocurrency investors come in during the bull market and they get programmed incorrectly because that is something that can have effect or can work sloppily in a bull market because everything's going up and everybody's a genius. You could literally buy anything and wait and make money, right? But that's not why this channel exists. This is not why I've been able to consistently return profits from the markets for almost 10 years now. And this is not why my guides or anything that I've created exists. It exists because you can't just make money in a bull market. You have to, if you want to be a trader, you want to be successful, you have to be able to make money in both types of market conditions. All 3 really, up, down, sideways, because those are the only 3 ways the market can move. Never seen it go backwards, but there's a first time for everything. So why is what you choose to trade so important? There's a lot of reasons. 1, when you actually commit to trading a certain basket of assets, then you are implementing a level of discipline into your trading. And you are saying to yourself, I am not just a random sloppy trader who expects random sloppy results. I have a plan, I have a strategy, and I'm going to approach this plan and strategy like I would a fitness routine if I wanted to get into shape. If you wanted to get into shape and you just went to the gym sometimes when you felt like it and you did random routines every time you went there, the 2 times a week you went there, you're not going to get very good results. Okay. And it's because you're doing it wrong. It's the same with trading. If you're trading random things, it is almost impossible to learn and implement the necessary discipline, structure, and strategy to do this long-term successfully. Almost all successful traders I know either do one of 2 things. They either trade a small basket of assets on which they feel very competent, and in this basket of assets, they know almost everything about that asset. So I have friends who trade oil. They know everything about oil. They don't trade anything but oil. Sorry, that's the other one, right? Either you trade a small basket of assets. So I have friends that trade commodities, for example. Let's say they trade oil, corn, natural gas, and they know everything about those 3 assets. History, what's coming up, what's going on, who the big players are, what the market's doing, what the market's likely to do. And that gives them an edge because they're so plugged in. I have friends who trade ETFs, and they trade a small basket of ETFs because they know everything about those ETFs. Crypto, I know people who trade Bitcoin, Litecoin, Ethereum, and Ripple because they're plugged in. Those are the macros. They study the news. They know what's coming. They know what's going on. They know what's happened. And they can tell you everything about those assets. I can tell you everything about Bitcoin. I can tell you almost everything about Ethereum because those are things I trade, right? I trade about 20 to 30 different cryptocurrencies depending on the market cycle, okay? And that is more than enough. You don't need to trade hundreds or thousands of cryptocurrencies. The market is so correlated. Just pick a smaller basket of assets. And in the beginning, I recommend picking 1 or up to 5. If you're completely new to trading or if you're in your first year, and you're not consistently profitable, just trade 5 things, preferably 1, until you're good at it. So the other type of traders who are very successful trade only 1 thing, and they're even more plugged into that 1 thing. Not only are they up to date on everything that's going on, they know what other people don't know because they're so plugged into the scene. That gives them an edge. It improves their personal edge in what they're trading. If you're trading Bonk coin, which we're going to cover here in a minute, and you know nothing about Bonk coin, you have no edge. You do not have an edge. Especially in cryptocurrency when there's a lot of manipulation and you have a lot of you have a small number of very large players who have an outsized influence on the market with their buys and sells and their market activities. If you don't have an edge and you don't know what you're doing, you don't know specifically about the project that you're trading, you're wasting your time. You might make money horizontally, accidentally, but you're not going to make it on purpose. So asset selection, asset selection, asset selection. Backtest a strategy. If you're using the Pathways to Profit methodology, information in the description below. Using the Pathways to Profit methodology, you develop your strategy, you backtest it on a basket of assets, and then you forward test, and then you take that sucker live. Because you know that your backtesting results, the way that we do it, is going to be similar to your forward testing results. And if it's not, you made a mistake in your backtesting, go back and redo it. But when your backtesting matches your forward testing, you go live and you make money. That's what you do by doing the same thing over and over and over again. It's a job. It's fun. Point. Okay. Yes. All right. Cool. 5mistakes.cracking.cryptocurrency.com. First link in the description. You guys can find all that information and more. I go into much more depth in the guide, and I cover the other 4 secrets as well. And we'll be covering the other 3 later on in the week. For now, let's talk a little bit about current events. So Consensus, these are the developers of MetaMask. They are cutting upwards of 100 staff. And again, this is just one more of those is at the end of the bear market indicators that I've been looking at because, right? Buy when there's blood in the streets. Everybody fleeing crypto. Here's the thing about crypto, and I firmly believe this. Cryptocurrency to me is the most exciting sector in the world, right? So think about this. While everybody's talking about the negatives, while everybody's talking about the blood and the money lost and this and that and Binance and FTX and blah, what they're not seeing is the opportunity. This is a sector where a kid was able to make a net worth of like $40 billion within 4 years. Came out of nowhere. Get out of here. There is so much opportunity. And here's the exciting thing. All these behemoths that you would have never thought you could compete against as an entrepreneur, as a market maker, as an asset manager last year, they're gone. The field's wide open. If you're a good trader, if you want to become a good trader, do you have any idea the opportunities that are available to you as a fund manager in the cryptocurrency space? As a portfolio advisor? As an investment advisor in cryptocurrency? Oh, well, Justin, there's, I don't got a certification for that. People in cryptocurrency generally don't care whether you went to college or not. This is a sector where we have a huge disconnect from the typical vehicles, from the typical routes of life. Now, I'm not saying it's bad to have a college degree. I have a college degree. I'm not saying it's bad to be informed about the broader market. You should be. But cryptocurrency is a space where we are results oriented. You got a degree? Cool. Can you produce results? No? Okay, you're out. We're going to hire the 18-year-old kid who can. See what I mean? We're results oriented. Oh, I see you've got a degree from Cornell on computer science. Great. Can you code up this blockchain? Oh, no? Oh, we'll take the 16-year-old Indian kid who can. Right? Results oriented. So if you're a profitable trader and you want to expand and make more money than you probably will make trading, and make it as a portfolio advisor, make it as an asset manager, make it as a fund manager. So many opportunities in this space, and they're wide open. Three Arrows Capital, gone. Celsius, gone. Coinbase, you see what I'm saying? All of these. So the smaller companies that were acting as fiduciaries of your money and offering you yield, they've been blown out. And the bigger companies are struggling. We're going to see that right now with, for example, Coinbase. Coinbase announcing more job cuts amid market jitters. Here's the same thing. Less and less people are trusting the big companies. They need somebody to stand up that they can point to and trust. And you can be one of those people. Stop being lazy. Stop being bad at what you're doing. Focus on being better. Turn it into a marketable skill. Reach out to people. Build a network. You can be a success story. You don't have to be caught up in the bloodshed. There is opportunity where others fail. Shiba Inu themed bonk tokens are yielding nearly 1,000% for Solana liquidity provider. Solana is pumping. Can we believe that? Man, it just gets crazier and crazier and crazier, man. So that was another one of those contrary investing trades that we could have taken with everybody hating on Solana with the collapse of FTX. I mean, it was almost bound to pump, right? Well, Justin, it's easy to say that. Did you buy Solana? No, I didn't. But yes, it is easy to talk about in hindsight. That's why I'm doing it. Anyways, so this meme coin is up over 150% in the last 24 hours and have recorded some of the highest trading volumes on Solana-based decentralized exchanges. I'm not sure. I'm not sure. This is all I know about Bonk. I read a headline and I'm just sharing the headline with you. And the reason I do so is because we have a lot of smart DeFi viewers who will go out and do the DeFi stuff that I'm just okay at. Not too bad, but my main avenue is just centralized exchanges and trading in that fashion. I have very good relationships with the centralized exchanges I trade on, et cetera, et cetera. So, but Shiba Inu themed Bonk tokens are yielding nearly 1,000% for Solana liquidity provider. So apparently you can go get it, stake it, Shiba Inu themed. That's the narrative. Dog coins do good. We love it. Usually don't like to buy things when they're up 150%, but then again, that's what you would say right before it runs up 1,000%, but that's also what you'd say before it drops down 90%. So pick your poison, right? Remember what I just said about running out and buying random shit, right? Okay, and an update on the what is going on with my computer right now? You see, I just started listing lazily to the left. That was absolutely crazy. FTX former engineering chief Nishad Singh looking for deals from feds. Singh may hold key information to show how Sam Bankman-Fried violated numerous federal campaign finance laws. All right, so this is another one of Sam Bankman-Fried's former confidants and roommates. He is currently talking with the U.S. District Attorney's Office in the Southern District of New York, hoping to get a plea agreement. We already know that Carolyn Ellison and Gary Wang have both pleaded guilty to the fraud charges, and they have both, I believe the proper term is snitched on Sam Bankman-Fried, who will not receive any kind of, I think the hearing is in August of 2023, so he's just going to be walking around free and clear until August of 2023. No big deal. Just, a little more money than Barry Madoff. Not a problem. Blah, blah, blah. So yeah, again, this is just another one of those opportunities where there is bloodshed, guys. opportunities where there is bloodshed. So Sam Bankman-Fried, everybody's talking about how negative things are right now. If you've got a computer science degree, go build a centralized exchange. I'm serious. If you're a trader, start offering your services to other people. Start keeping records. Keep a track record. Start posting your results. You'll be amazed at how quickly you can build a following. All right, guys. That's all for me today. Thank you so much for joining me for another fantastic episode of the Breaking Bitcoin Market Update, brought to you by crackingcryptocurrency.com. Make sure to tip your waitresses. Go grab your free copy of the 5 mistakes holding you back from profitable trading. And if you'd like to work with me in 2023 to grow and protect your wealth, there's lots of ways to get involved. Check the links in the description. If you want to get involved in the trading and investment group, if you're interested in some of our online trading courses, and many more ways to work directly with me and our community to grow and protect wealth in 2023. Until tomorrow, guys, I will see you then. Trade safely and be kind to each other. Cheers.